Welcome to Amuse World, your go-to destination for all things business and finance. Today, we're diving into one of the most infamous corporate scandals in American history, the Enron Scandal. You may remember reading about it in the news or hearing about it in school, but how much do you really know about the aftermath of the Enron Scandal? How did it change the way we view the stock market and corporate accountability? And what impact did it have on the average American investor? We'll be answering these questions and more in today's video. The Enron Scandal. In early December 2001, Enron Corporation, a highly regarded energy company with $63.4 billion in assets, filed for bankruptcy. It was the largest bankruptcy in U.S. history at the time, and it sent shockwaves through the financial world. Many of the company's executives, including CEO Jeff Skilling and CFO Andrew Fastow, were convicted of fraud and other crimes. Shareholders filed a $40 billion lawsuit against the company, and its auditor, Arthur Andersen, went out of business after losing many of its clients. The impact of the Enron scandal was felt far and wide. For one, it was a black mark on the U.S. stock market. At the time, most investors didn't see the possibility of massive financial fraud as a real risk when buying U.S.-listed stocks. U.S. markets had long been the gold standard in transparency and compliance, says Jack Ablin, founding partner at Crescent Capital and a veteran of financial markets. The Enron scandal was a real wake-up call for investors. It was a real 1-2 punch on credibility, and it was a watershed moment for the U.S. public. The company's collapse also led to new regulations for auditors, accountants, and senior executives. These regulations included huge requirements for record-keeping and criminal penalties for securities laws violations. This has led to less choice for U.S. stock investors and lower participation in stock ownership by individuals. The aftermath. The Enron scandal had a major impact on the average American investor. Many people lost trust in the stock market and decided not to invest their money. According to the survey of consumer finances from the U.S. Federal Reserve, in 2020, 55% of the population owned stocks directly or through savings vehicles such as 401ks and IRAs. That's down from 60% in the year 2000. This drop in stock market participation has contributed to the growing levels of wealth inequality across the U.S. The Enron scandal also made it harder for companies to go public. In the wake of the scandal, Congress passed the Sarbanes-Oxley Act in 2002. This legislation holds senior executives responsible for listed company financial statements. CEOs and CFOs are now held personally accountable for the truth of what goes on the income statement and balance sheet. While the intention of the legislation was to increase transparency and accountability, it has been criticized for being overly burdensome and costly for companies to comply with. This has made it more difficult for companies to go public, and executives are less likely to take on entrepreneurial risks. The Enron scandal also had a major impact on the accounting industry. Arthur Andersen, Enron's auditor, went out of business after losing many of its clients. This was a major blow to the accounting industry, and it led to new regulations and laws that have been criticized for being unnecessary and harmful. The Enron scandal also led to a change in the way we view corporate accountability. The scandal revealed that many of the company's executives had engaged in unethical and illegal activities, and it led to increased scrutiny of corporate leaders and their actions. This has resulted in stricter laws and regulations for corporate governance, which has made it more difficult for executives to engage in unethical behavior. The Enron scandal also led to an increase in whistleblower protections and regulations to protect employees who report illegal or unethical activities. The Enron scandal also had a significant impact on the way we view corporate culture. The scandal revealed that Enron's culture was toxic and focused on greed and deception. This led to increased scrutiny of corporate culture, and it has led to more companies focusing on creating a culture of transparency and integrity. The Enron scandal was a major turning point in American business and finance. The aftermath of the scandal has had a lasting impact on the stock market, corporate accountability, and the average American investor. The Enron scandal led to new regulations and laws that have been criticized for being overly burdensome and costly for companies to comply with. It made it harder for companies to go public, and has contributed to the growing levels of wealth inequality across the U.S. as we've seen. The Enron scandal has had a lasting impact on American business and finance. But what do you think? Have the regulations put in place to prevent another Enron scandal gone too far? Have they been effective in preventing another corporate scandal? Let us know your thoughts in the comments below, and don't forget to subscribe to Amuse World for more informative videos on business and finance. Thank you for watching.